Oh, hey, good afternoon, everyone. Omid with you again for another weekly market update. This is going to be a very short, concise one with all the things that are going around. So let's just jump right into it, shall we? The war with Iran continues, and that is showing a fair amount of inflation from the fears around crude oil prices. So as you can see on that chart there, we've had quite the spike here. As of the last read here, WTI was at $95 a barrel, actually got all the way up to $120 a barrel before it settled down a little bit more. And so when gas costs more, we spend more money, and that expenditure is inflationary. And here we are. Remember, bonds hate inflation. So at this point there, we're going to rely on the technicals of mortgage-backed securities. And we can see here that this guy is testing this line, but there's a lot far to fall before it catches itself again. So we're going to be watching that very closely for you. The opposite of mortgage-backed securities, and really where all that money comes from, are the U.S. Treasuries, which is what you're looking at here. The story is no different here. The treasuries are also testing the bottom. They operate in opposite, if you remember. So as treasuries go up, so do rates, and that's why you're seeing the increase of mortgage rates as of late. The only hopeful spot here, guys, is that in January the 20th, we were here. So, we've got a lot of rate reductions here. We've all benefited from that, the folks that have bought and refinanced. But now this might be a little bit of a unknown until we can figure out what's going on with the rest of this war. The things that are going to shake the market up this week: ADP jobs report on Tuesday. That's going to be important. The CPI, which follows the producers price index that measured inflation at a wholesale level last week, that came in hot. That's set to come out this Wednesday. My bet, that's going to be hotter than expected as well. And then finally, the PCE, personal consumption expenditure, all these acronyms I know, that measures inflation. That happens to be the Fed's favorite measure of inflation, to see if inflation is cooling off or heating back up. So expect both of those to be heating up, in my humble opinion. As always, don't forget to follow us on that Instagram account, because we post daily rates and daily happenings. So you're not going to have to only monitor this once a week as we produce this report. Okay, what does that mean for rates? Well, things got ugly quickly. 6.17 across the board on 30-year fixed nationally, and 6.48, almost 6.5 on jumbo loans. Remember, these rates are national averages. They're on purchase loans with 25% down, 780 credit score. So make sure you speak to your people and have yourself dialed in so you get accurate rates. Okay, as always, do subscribe, like, comment, and share about these things. Hang in there. It's a very stressful time in the world, but hopefully, with any luck, we'll get through it. Our hopes, our dreams, our prayers, all that goes out to the people of Iran, as well as the men and women serving in our military. Okay? Take good care. Chat with you again soon.